All right, if you're anywhere near the Dallas-Fort Worth area, you know the housing market has been giving us some serious whiplash. I mean, one minute it's an absolute frenzy for sellers, and the next, well, it feels like a whole new ballgame. So today, we're going to break down exactly what is happening in DFW real estate right now in November 2025 and what it all means for you. And I'm not exaggerating. Just think back to 2023. Sellers had all the power, right? Bidding wars, waived inspections. It was just insane. Well, fast forward to today, and the script is totally flipped. In 2025, the power has swung, and it has swung hard, right into the hands of buyers. And look, this isn't just some abstract trend we're talking about. This is what people are actually feeling on the ground. This quote here from social media in Salina, one of DFW's fastest growing suburbs, it just says it all. People are realizing that buyers finally have some breathing room. They have options. So that's the billion-dollar question, isn't it? Whether you're thinking about buying, maybe you're looking to sell, or you just want to get a read on the health of one of the country's biggest economies, we're about to unpack what all these changes really mean. Okay, first things first. Let's start with the big picture. What are the major forces that are creating this real estate reset in DFW? It really boils down to this one core tension. Think of it like a tug of war. On one side, you have a flood of homes for sale, more than we've seen in 20 years, which should be pushing prices down. But on the other side, you have these stubborn mortgage rates, hanging out around 6.75%, making it more expensive to actually buy those homes. This single push and pull explains almost everything else we're seeing. So now, let's get into the nitty-gritty. Let's dive deep into the data, because the numbers really paint a crystal clear picture of just how big this shift truly is. First off, just look at this. Housing inventory has absolutely exploded. We're not talking a little bump here. Active listings are up more than 30% from just last year. That's over 21,000 homes for sale, a 20-year high. For buyers, that translates to one thing: choice, a whole lot of it. But here's the other side of that coin. At the exact same time that all these homes are hitting the market, buyer demand is cooling off. Pending sales, so homes that are under contract but not yet closed, are down over 5%. And yeah, that's a direct result of those higher mortgage rates we talked about. It's a simple formula, really. More houses plus fewer buyers equals a completely different market. And that leads us to this really crucial number, 5.8. That's the month's supply of inventory. In simple terms, if no new homes came on the market starting tomorrow, it would take almost 6 months to sell everything that's currently available. Now, a 6-month supply is considered a perfectly balanced, healthy market. We are right there, which feels like a different planet compared to the 1-month supply we saw during the frenzy. So, it should come as no surprise that homes are just sitting on the market a bit longer. The average is now 52 days. That's 12 full days longer than a year ago. For sellers, this means that list on Friday sold by Sunday dream is pretty much over. But for buyers, it means you have time to think, time to actually make a decision, not just a reaction. Now, here's the plot twist. With all this extra inventory and softer demand, you'd think prices would be tanking, right? But they're not. The median sale price is holding incredibly steady at $389,000. It's almost perfectly flat compared to last year. This really shows just how resilient the underlying DFW market truly is. So how is that even possible? Well, the secret is right here, in the sale-to-list price ratio. It's sitting at 96%. What this tells us is that while the final sale prices look stable, what's happening behind the scenes is that sellers are negotiating. The average home is selling for about 4% less than its final asking price. Negotiation is back, my friends. Of course, the housing market doesn't exist in a bubble. So let's zoom out for a second and take a look at what's happening in the commercial and rental sectors. This gives us some really important clues about the overall health of the DFW economy. And what we see is a really interesting mixed picture. Take the office market. Yeah, vacancy is still high, but it's actually been improving for 3 straight quarters. The industrial sector, it's an absolute powerhouse, super strong. But then you look at apartments, multifamily, and their vacancy rate is at a 20-year high, which is really putting pressure on landlords. It just shows you how complex and dynamic this whole economy is. So, with all that in our back pocket, where do we go from here? What's next for DFW? Let's take a peek at what the experts are forecasting for the future. Well, the good news is nobody is predicting a massive crash. The consensus seems to be that we're in for a period of stabilization, maybe some minor adjustments. You see Zillow predicting a slight rise, maybe a very modest dip next summer. But long-term, big players like Goldman Sachs are still projecting solid gains. It's all pointing to a soft landing, not a catastrophe.
And why are the experts so confident in the long run? Because the fundamental economic engine of DFW is just incredibly strong. It's a job-creating machine, attracting huge corporate headquarters like Toyota and Topgolf, and it's projected to add over 1 million new residents by 2030. I mean, when PwC ranks you the #1 market for investment in the entire country, you know you've got a powerful tailwind to get you through any short-term turbulence.
Okay, so we've covered the what and the why. Now let's get to the most important part. What do you actually do with all this info? This is your playbook for navigating the DFW market right now. For buyers, the message is pretty clear. Your window is now. You have choices, you have negotiating power, and you can probably get the seller to help you with closing costs. So get your financing lined up and be ready to make a strong, smart offer. The data shows that aiming for 4 to 6% off the list price is a totally reasonable place to start.
And for sellers, the new name of the game is finesse. The days of just putting a sign in the yard and watching the offers pour in are gone. Pricing your home realistically from day one is the most important thing you can do. You've got to be ready to negotiate, and you have to make sure your home stands out from the crowd. Because believe me, there is a crowd. Which leaves all of us with the central question of this DFW market. You have more homes to choose from than you've had in years, but financing them is expensive. So what's the bigger risk here? Waiting on the sidelines for rates to drop, knowing that competition and prices might just shoot right back up? Or jumping in now, locking in a price while you have the power, even if it means the higher rate? That's the tough decision that this new, more balanced market is forcing us all to make.